Hello guys, good day. Welcome to another video in ACP 311, accounting for special transactions. So in this video, we will be discussing partnership operations, particularly distribution of income and losses. By the way, I am your lecturer, Sir Zhao. And in the past video, we have discussed partnership formation. So in that video, we were able to discuss and establish concepts on how are we going to form a particular partnership, specifically on establishing journal entries on the books of the partnership. So after forming a partnership, the next stage in the life of a partnership includes the operations of the partnership. So in this particular topic, we will be computing, we will be establishing concepts on how to compute net income of the operation of the partnership, and at the same time we will be discussing on how are we going to distribute income and losses to the partners of a particular partnership. Okay, to start with, we have here the introduction. So the computation of partnership net income from partnership operation is still the same with other forms of business. However, it differs on the way it is distributed to the respective partners. So we don't have any issue at all in the computation of the net income, because just like other business organization, like that of the sole proprietorship and that of the corporation, the computation of the net income under partnership will just be the same. So we will just still be using the pro forma of computing the net income, like net sales less cost of sales to compute for your gross profit, then less all the expenses to compute for the net income. However, what makes partnership unique from those other business organization is that the distribution of net income. So in this topic, or in this particular section, these are the specific issues that we will be addressing. First is the proper distribution of partnership profits and losses among the partners. Second is the preparation of financial statements. And the third one is changes in the profit or loss ratios and calculating the correct net income or loss from prior period. However, we will be focusing our discussion in this first accounting issue, which is the proper distribution of partnership profits and losses among the partners. So in distributing the profits and losses, we have different rules to follow. And these rules is actually indicated in the partnership law, which gives us guidance for the distribution of the profits or losses among the partners. So here are the following summary for the profits and losses distributions. So let's start with the profits. What are the guidelines, or what is the criteria, or um, the the hierarchy to be followed in distributing profits? So when we talk about distribution of profits, the first in line is based on agreement. So again, partnership is an agreement. So therefore, their distribution of profit will also follow what is being agreed by the partners, what is being indicated in the articles of partnership. However, number two, if there's no agreement as to profit distribution, we will be using the original capital distribution. So the second in line after the agreement is the original capital contribution if the agreement is absent as to the distribution of profit. And the last one is if no agreement as to profit distribution and the original capital contributed cannot properly be determined, then profits must be divided equally. So if number one and number two is not present, then our option will be number three. So that means the partnership profit will be divided equally among the partners. So these are the hierarchy of options that we will be using in distributing profits. However, we have separate hierarchy of options in terms of losses. So in terms of losses, we will be using first the agreement. Second, if no loss agreement, we need to use the profit agreement. So if there's no loss agreement, if there's no specific agreement as to how the partners will be distributing losses, then therefore they will use the profit agreement, because sometimes there's a separate agreement between profit distribution and loss distribution. If there's no loss distribution, then we need to follow the manner on how they are going to distribute profits. And then number three, if no profit and loss agreement, then use the original capital contribution. And lastly, number four, if no agreement as to profit or loss distribution, and the original capital cannot properly be determined, profits or losses must be divided equally. So again, these things are important for us. We need to familiar these things because this guide will be used in the later discussions, particularly in actual distribution of profits and losses in the partners. Okay, the following are the possible methods of dividing the profit or loss among the partners. So first, equal the loss and profit will be divided among the partners. So again, the first option earlier as to how are we going to distribute the profit or loss is based on agreement, and that particular agreement can be on this particular method. So they could agree to divide profit and losses equally, or based on arbitrary ratio, based on capital balance on a particular date, and they could also agree to provide allowance of the following. So they could also provide interest on capital, salaries to partners, bonus to managing partner based on net income, and remaining balance of net income. However, it is important to note that these allowances are not absolute, meaning the partners should still agree before giving these allowances to each of the partners. So if the partnership articles is silent about allowance on, or silent about giving this type of allowances to the partners, then therefore we should not assume that these allowances will be given to the partners. It will only be given to the partners if there is actually an agreement between the partners. So let's start. First illustration. Assume that on January 1, 2020, Say and Chu formed a partnership with an investment of 30,000 by C and 60,000 by Chu. On December 31, 2020, after closing all income and expense accounts, the income summary accounts shows credit balance of 60,000. So meaning the partnership realized a net income of 60,000, representing the profit for the year 2020. So changes in the capital accounts during 2020 are summarized as follows. So these are the summary of capital changes. So it starts from the beginning balance up to the ending capital balance. So we have here the data for C and data for Chu. So we have for C, we have beginning balance of 40,000, and until such time, at the end of December 31, 2020, it has already an ending balance of 60,000. So same thing with Chu. So it has beginning balance of 60, and then at the end of the year, its balance increased to 100,000. So of course, that changes is from additional investments and withdrawal they made for that particular year. To continue the illustration, let us say the assumption of dividing the profit is equally. So, the net income of 60,000 shall be divided by Say and Chu equally. So, of course, from 60,000, you just simply divide the 60,000 into 2 to compute for the total net income to be distributed to the partners. So, again, from all of the methods which the partnership could use in distributing partnership losses and profits, this is simple in the most simple method in distribution, because you just simply divide the total net income among the number of partners in the partnership. So you have that. So to record the division of net income for 2020, so you just debit income summary, you are debiting income summary because you will be closing that income summary account to the capital accounts of the partners. So therefore, to credit the capital account of the partners from the net income for 2020, so you will be debiting income summary for 60,000 and credit say capital and due capital for 30,000 respectively. Okay? On the other hand, however, if the business has a loss of 60,000 during the year, the income summary must show a debit balance of 60,000 and the closing entry should be debit to say capital 30,000, due capital 30,000 and income summary of 60,000. So obviously, if there's a loss, you will have a debit balance in the you will have debit balance in your partnership books. And then upon closing this debit balance, it will be close to your capital account. So that is why since there's a loss, it will be debited to the capital accounts of the partners. So since there's a loss, based on our discussion in our first video that if there's loss, such loss will decrease or will reduce the capital account of the partners. So again, if the partnership used equal distribution, wala kayo tay problema kay ato alang mang i-divide ang profit or loss to the number of partners in the partnership in distribution. So ano lang, basta if there's profit, there will be a capital to be credited to the partners. Pero if there's a loss, their capital account will be debited. So that means their capital account will be decreased. Now, assuming that the partnership uses arbitrary ratio. So arbitrary ratio, this is a specific ratio agreed by the partnership. And this particular agreement is stipulated in the articles of partnership. So assume that Say and Chu agreed to divide profits and losses in the ratio of 60% to C and 40% to Chu. The closing entry to divide the net income of 60,000 to individual partners would include, but before preparing closing entries for the distribution of income, let us first compute for the profits to be distributed or to be allocated to C and Chu. So since the partnership income is 60,000 and the share of C is 60 and for Chu is 40, you just simply multiply their ratio towards the net income of the partnership. So therefore, C will be receiving 36,000 in the partnership income and Chu will be receiving 40% from the partnership income, making 36,000 and 24,000 to be credited on their respective capital account. And obviously, the debit will be income summary to close this income summary account in the books of the partnership. So again, if there's arbitrary ratio, you just need to multiply the respective ratio allocated to a particular partner in computing for their share in profits. Another example or another method will be dividing the profit or loss in the ratio based on partners' capital balance. Now, in using partners' capital balance, we actually have four ways on how are we going to distribute profit and losses based on capital balances. So it might be original capital, it might be based on beginning capital, it might be based to ending capital, and last one, it might be based to the average capital balances of the partners. So let us consider computing for the share of each partner using partners' capital balances. So under ratio based on original capital, so we will just be dividing the 60,000 net income of the partnership by making a ratio out of the original balances of the partners. So for example, the original capital, when we talk about original capital, it is the first it is the original capital invested by the partners. Okay, dili dapat ta malibog kung unsa si beginning capital balance og si original capital balance. Okay, when we talk about original capital balance is really the original capital they have invested on the first date or on the formation of the partnership. Okay? When we talk about original capital balances, it means the balances of their investment made on the formation of the partnership. While beginning capital balance, it refers to the beginning balance of a particular year. So that means beginning balance for a particular year might be changed depending on the year, but the original capital balance would be absolute. Original capital balance will not change, but beginning capital balances might actually change as time passes by. For example, beginning balance nila for year 2020 is 40,000 and 60,000, pero ang beginning balance nila for 2020 ang beginning balance nila for 2021 is dili na 40-60 but rather 60,000 and 100,000 na. Again, your original capital balance is the balance of their investment made on the formation of the partnership, while the beginning balance is the balance at the beginning of the year. Okay, based on the given, the original capital of Say in Chu is 30,000 and 60,000 respectively. So to compute each share in the partnership net income, so you just create a ratio or a fraction. So that's 30 over 90. So 90 is from 30 plus 60,000. So 30 divide 90. So ang share ni C will be 20,000 and ang share ni Chu will be 40,000. So 40,000 is from 60 over 90 times 60%. So obviously, ang journal entry ani to record in the books of the partnership would include debit to income summary, credit to C capital, credit to Chu capital for 20,000 and 40,000 respectively. So they could actually opt also to divide partnership net income based on the beginning capital. So as mentioned earlier, na iba si original capital and iba si beginning capital. So based on the illustration, beginning capital of C and Chu are 40,000 and 60,000 respectively. So same process lang kay original capital. You just create a fraction for C and Chu. So 40 plus 60,000, so that's 100,000 for your denominator. So 40 over 100 times 60,000, so that's the share for C, 24,000. And for Chu, we have 60 divide 100,000 times 60,000, so the share of Chu in the partnership profit will be 36,000. And lastly, based on ending capital. So ending capital, this means the capital at the end of the year or at the end of the accounting period. So based on the illustration again, the ending capital for C is 60 and Chu for 100,000. So you will add it up. So we will have 160,000 for your denominator. So 60,000 divide 160 times 60,000 to compute for the share ni C. So C will give you 22,500 and Chu will receive 37,500. So same pro forma entry, debit to income summary account and then credit to their respective capital accounts. The fourth method of dividing profits and losses based on capital balances will be ratio based on average capital. So this average capital will also have two methods. So this will be the simple average method and the peso month, peso day method. Okay, to start, let's have simple average first. So in simple average, you just need to compute for the average of their capital balances by adding the beginning balance and the ending balance of the partners capital balances in the partnership and divide it by 2. So we have 40,000 plus 60,000 divide 2. So simple average balance of C is 50,000 and simple average balance sa capital ni Chu will be 60,000 plus 100,000 divide 2. So again, these 40 and 60 are both beginning balances and 60 and 100 are ending balances of C and Chu. Divide it by 2 to compute for their simple average balances. So therefore, nakakompute na ta og simple average balance. 50 para kay C and 80,000 para kay Chu. So from that, 50 and 80 mo na ang ato ang gamiton in computing for the net income to be distributed para kay C and Chu. So again, just like the previous one, you create a ratio out of that simple average balance. So 50 plus 80, you'll have 130 as your denominator. So para kay C, you'll have 60,000 times 50,000 over 130. And para kay Chu, it will have 60,000 times 80,000 over 130,000. So from 60, 23,000, 77,000 will be given to C, and 36,923 will be given to Chu. So this simple average method is simpler compared with the second one. The second one is the peso month, peso day weighted average capital. It's a bit complicated compared with your simple average method because all the transaction, all the activities that affects your um, capital account like investment, additional investment, and withdrawals will affect the average capital balances. So under this approach again, only the permanent withdrawal must be considered and the temporary withdrawal must be ignored for this purpose only. So we need to consider that um, your temporary withdrawals will be disregarded in computing for your weighted average capital. So the I will be presenting to you two ways to compute for your weighted average capital. This one, and I will be presenting to you an alternative way as well later on. So again, let's have this first. So let's have C and Chu. So assuming that these are the activities that affects C's capital. So it has investments, additional investments, and withdrawals as well as Chu. So let's have for C. So it has beginning balance on January 1 of 40,000. So capital balance of 40,000, capital account balance as of January 1 of 40,000, and then fraction of year unchanged. So asa man nagikan si 2 over 12. Fraction of year unchanged, that means pila ka months nga ang capital account balance nimo nag-remain nga 40,000. So that means mo check ta sa second nato na entry which is on March 1. So that means from January, February, your capital account balance of 40,000 does not change. So therefore, the fraction that you will be using here will be 2 over 12. So asa gikan ang 2, that is from January and February because on March 1, starting March 1, there is now an additional investment of 20,000. So therefore, the capital account balance will no longer be 40,000 but 60,000. So that is why we used 2 months here as our numerator. And from that, you multiply 2 over 12 sa ato ang capital account balance ng 40,000. So therefore, ang average capital account balance for our original or from our beginning capital is 6,667. And that process will be followed in the succeeding nato na mga entries in the capital accounts. So on March 1, na additional investment again nga 20,000. So therefore, dili na 40. So na-addan og 20,000 ang atong capital balance. So from 40,000 it becomes 60,000. So but pila man ka months kanang 60,000 nag-remain nga unchanged. So, ihapta kano sa ang next nga entry that's on August. So, gikan sa March, April, May, June, July. So, naay 5 months nga wala nag-change ang capital account balance nimo of 60,000. So, therefore, ang gamito nimo diri ang numerator is 5. So, 5 over 12 times 60,000, you have 25,000. And for August, we have 20,000. So 20,000 plus our existing capital balance of 60, we will have 80,000 capital balance as of August 1 times 2 over 12, 2 because the next entry is on October 1. So there are 2 months nga nag-separate kay August o kay October. So that's August and September. So that's 2 over 12. And then we also have withdrawals. So if it's withdrawals, it should always be deducted to compute for your average capital balance. So we have 20,000 na withdrawal. So from 80 minus 20, it becomes 60,000. So 60,000 times 3 over 12, it gives you 15,000. So diri as average capital account balance, dili na nato ni siya i-deduct. Asa lang nato siya i-deduct, diri alang sa ato ang capital account balance. So 80 minus 20, so it gives you 60 times 3 over 12. 3 because there are 3 months before mag-December. So that's October, November, and December. So that's 15,000. So in total, ang average capital account balances nato for C will be 60,000. So ang average capital account balance for C will be 60,000. So same process lang po ang atong gamiton in computing for Chu. So para kay C na ay 60,000, kay Chu na ay 110,000. So ang total average capital account balances sa duha ka partners will be 170,000. And this 170,000 will be used in computing later on the share of C and Chu in the partnership profit and losses. But however, this is an alternative way. I think this is an easier way for you to compute the average capital balances. So, for example, C, it also records all the transactions that affects the capital account of C. So we have here January 1 beginning balance, additional investment on March 1 and August 1, and we have withdrawal on October. So, unsa man ang buhaton nato diri So, atoa lang siyang i-multiply sa number of months outstanding. So, pasabot dili siya parehas kaganina na ang ihapon nato is pila ka months bago nag-change ang total capital balance. But here, ang i-multiply nato is ang actual investment or actual withdrawal with the total number of months outstanding na nga or total number of months nga nahimo ng outstanding ang investment ug ang withdrawal. So again, we have for example on January 1 beginning balance, so we have 40,000. So you will be multiplying that to 12 over 12 because outstanding man siya from January to December. So you will have 40,000 times 12 over 12. So it's 40,000. For March 1, additional investment na 20, it will be multiplied to 10 over 12 because outstanding siya from March to December. So there are 10 months from March to December. So it will give you an average capital balance of 16,667. And for August, nga 20,000 nga additional investment, so multiply it by 5 over 17 because there are 5 months from August to December. So August, September, November, August, September, October, November, December. So 5 months. 20,000 times 5 over 12, so you have 8,333. In this one, withdrawal, so since it's withdrawal, it is a deduction. So 20,000 times 3 over 12 from October, November, December. So 20,000 times 3 over 12, it will give you 5,000. So again, since it's a withdrawal again, it will be deducted to compute for your average capital account. So it gives you 60,000. So if you have noticed, it's under this method, it will just still give you the same average capital balance using the previous one. Using the previous one, we have here 60,000 and 110,000 for C and Q respectively. And under the alternative method, it will still give you 60,000 and 110,000. But again, it requires lesser analysis in computing for your average capital balances. So, journal entry to record the distribution of the profit. By the way, um, before you create a journal entry, you compute first the um, net income to be distributed to C and Chu. So from that, you will use 60 and 110 respectively. From the illustration earlier, ang net income nato is 60,000. So ang share ni C will be 60 over 170 times 60,000. And ang share ni Chu will be 110,000 over 170,000 times 60,000. Okay? To compute for the net income of C and Chu. Okay? Let's proceed. Okay. Partnership contract may provide for interest allowances on partners' capital in order to encourage capital investment. Remaining profits are then divided equally or in any other specified ratio. So that means if there are agreed allowances to be given to the partners, it will be deducted first to the net income and then the remaining will be distributed using the agreed method by the partners. Interest allowed to partners varies from one partner to another due to the differences of capital contributions and balances. Partnership contract should therefore provide that as a specific interest rate will be allowed to a partner based on his beginning capital balances, ending capital balances, or average capital balances. So, allowance for interest may be based on the three capital balances of the partner. It may be beginning, or it may be original capital, beginning capital, ending capital, or average capital of the partnership. So, let's have an illustration. So we will still be using the data from C and Chu in this illustration with a net income of 60,000. For 2020 and the capital account balances as shown earlier, assume that the partnership agreement allows interest on partners' average capital balances at 12% with the remaining net income or loss to be divided equally. The net income of 60,000 for 2020 will be divided as follows. Okay, so let's account. Asa nato i-base ang allowance? So ang interest daw, allowance for interest is based on partners' average capital balance at 12%. So it's at 12%. So assuming that we will be using the average capital balances of 60,000 and 120,000 which is computed earlier. So assuming that we will be using the 60,000 and 110,000 average capital account balances as basis for giving our partners an allowance for interest. So the interest stipulated is 12%. So as what I have mentioned earlier, kung naay mga allowances nga ihatag ang partnership sa mga partners, it will be provided first sa mga partners. And then if there's remaining in the partnership net income, such partnership income will be divided depending on the agreed um, ratio or allocation to the partners. So according to this illustration, it will be divided equally man daw. So therefore, the distribution of the 60,000 net income will be as follows. So first, we will give C and Chu interest on average capital. So 60,000 times 12%. So that is 7,200. And then for Chu, 110,000 times 12%. So that is 13,200. So from that, naatay total of 20,400 already being given to our partners. So from 60,000, pila na lang ang nabilin? 60 minus 20,400, ang nabilin na lang is 39,600. Ang kanang 39,600 daw, that will be divided into 2. So therefore, such remaining balances will be given to C and Chu. So 60,000 minus 20,400 divide 2. So para kay C, 19,800 and then 19,800 also for Chu. So therefore, in total, from 60,000, 27,000 will be given to C and 33,000 will be given to Chu. So journal entry to recognize such distribution will be debit to income summary of 60,000, credit to C and Chu capital for 27,000 and 33,000 respectively. Okay, assuming that the partnership operation resulted to a net loss. So how are we going to account if there's a loss? Do we still need to provide our partners allowances or not? So, kailangan pa ba nato sila hatagan og allowance since wala man tay loss? So, the answer is yes or no, depending on the stipulation of the partners. Pwede sila mo agree nga hatagan gihapon nila og allowance, and then the net loss will be divided among themselves depending on the stipulation. But pwede pod sila mag-assume na dili na lang i-distribute ang allowances if there's no income or if there's a loss. So example, baliktad diri okay, in this case, assuming that the partnership still agreed to distribute profit, to distribute allowances. So, allowances will be given to 7,200 to C and Chu of 30,200. Pero take note, natay loss diri So, from that, loss nga 10,000 minus total allowances provided to the partners. So natay net loss of 30,400. And then that 30,400 will be divided into two to be distributed to C and Ju. So 15,200 for C and 15,200 for Ju. So that means from the total 10,000 nga loss, that will be shared by C for 8,000 and Chu for 2,000. And the journal entry to close the income summary account on December 31, 2020 would be debit to C and Chu since there's a loss of 8,200 and then credit to income summary of 10,000. Okay, next we have assuming that the partnership agreed or the partnership agreement provides for annual salary of 30,000 to C and 20,000 to Chu, with result net income or loss to be divided equally. These salaries are paid monthly during the year. So the net income is 60,000. So based on the illustration daw, there is 30,000 and 20,000 na annual salary. So that is 30,000 and 20,000 salary. Okay, there's a monthly salary of 30,000 and 20,000. So therefore, this salary will be recorded as drawing. So you have there your journal entry, C drawing. Salaries will be recorded as drawing. So 30,000 divide 12 because there are 12 months. So this will be your monthly journal entry. Since ang distribution of the salary is monthly, so therefore every month you will be recognizing this. So C drawing true drawing for 2,500 and 1,667 respectively, and then credit cash for 4,167. So going back to the illustration, so we only have 60,000 nga net income minus salaries nga gihatag nato kay si og Judaan of 30,000 and 20,000, so that's already 50,000. So 60 minus 50, there's a remaining in the net income of 10,000 already. So the stipulation is to divide the remaining profit or losses to 2. So therefore, 10,000 divide 2, each partner will receive 5,000 and 5,000 respectively. So from 60,000, C will be receiving 35 and Chu will be receiving 25,000. So again, reminder, basta na ay allowances provided, unahon yun na nato og hatag. Unahon nato na og deduct sa net income. And then, whatever ang mabilin sa net income will be divided among the partners depending on the agreed stipulation. Okay, so year-end closing entries. So, debit to income summary of 60, credit to C capital of 35,000, and Chu for 25,000. This is for the total of 35 and 25,000 na net income to be given in the to be given in the partners. And then, since we have drawings earlier, these drawings will be close to your capital account. So, based on our discussion sa first topic na your drawing account is just your drawing account is just a temporary account. So, therefore, it will be close to your capital accounts. So, para ma-close nato ning drawing, atong uh, debit kay C capital. So, ang result aning 30 ug 20 nga drawing is a deduction to capital. Okay, continuing our discussion. So assuming that on December 31, 2020, C and Chu partnership has a net loss of 20,000 before salaries to partners. So the distribution of loss will be as follows. So if the partnership still agreed to distribute salaries, so therefore there will be a greater loss to be absorbed by the partners. So you give this you distribute first the partnership or the partners salaries to C and Chu of 30 and 20 respectively. So from that we have a loss of 20 minus the salaries of 20. So we have a total of 70,000 loss. Divide 2. So each of the partner will be absorbing 35,000 and 35,000 respectively. So from 20,000 na loss, it will be shared by C and Chu of 5,000 and 15,000. So pwede ni siya kay para ang objective ani is mas gamay lang og maabsorb nga loss ang ketong na ay dako nga salary. For example, si C, instead of receiving higher losses, so mas gamay na yang maabsorb kay dako man ang iyahang salary. So kung maingon ta nga, sir nganong ano man, nganong mag-distribute pa man og salaries ka na may loss. So it's actually okay kay para dili sayang ang work nga natabang or work nga na render ni managing partner or ni C ug ni Chu in the partnership. Important notes. So if the partners agree to provide salaries to partners, then this must be distributed to the partners regardless if there's a profit or loss, unless they agreed to omit the allowance for interest on capital in case the operating results are loss. And the partners may also provide an agreement that the salaries allowed will only up to the extent of the earnings. In case the salaries will exceed the net income and must be allocated based on the agreed salaries for each partner. So you consider all these important notes. Okay, how about if there's salary allowance? So mo naman itong gidiscuss ka ganina. So, balik ta. Okay, bonus to partners based on net income. So what if there's a bonus to partners based on net income? So napud tay upat ka bonus computation. So this one na-discuss na nato ni sa inyong financial accounting or sa inyong intermediate accounting. But diri pwede pud ta maghatag og bonus aside from salaries, aside from interest sa ato ang mga partners. So your bonus may be net income before salaries, interest and bonus, net income before salaries and interest but after bonus, before net income after salaries and interest but before bonus, or net income after salaries, interest, and bonus. So natay upat ka pamaagi on how to compute our bonus. So assuming that these are the given information, the partnership net income is 190,200 before salaries, interest, and bonus to partners. And the partnership provides for the following: salaries C and 2 for 30,000 each, interest of 7,000 and 3,200 respectively, and bonus to C for 20% of net income, and the remaining profit or loss after salaries, interest, and bonus will be distributed equally. So since there are three provisions of allowances, so unahon sa nato hatag ang salaries, ang interest ug ang bonus before nato i-compute ang remaining profit. And kanang remaining profit i-divide nato equally. Okay? So first, assuming nga ang bonus is net income before salaries, interest, and bonus. Again, the bonus is before salaries, interest, and bonus. So therefore, it's easy. You just simply multiply the bonus rate to your net income. So net income before salaries, interest, and bonus man daw. So multiply it by 20%, 20%. So therefore, ang bonus ni C will be 38,040. So to compute for the profit distribution, so natay salaries, 30 and 30 respectively for C and Chu, interest of 7,000 and 3,200 for Chu of, so we have a total of 10,200 and bonus to C of 38,040. So pila tanan ang ato ang allowances provided to our partners. we have a total of 108,240. So therefore, ang nabilin, 190,200 minus 108,240 will be 81,960, and that 81,960 will be divided into 2. So C will have 40,980 and Chu as well will have 40,980. So from the total net income of 190, 116 and 20 will go to C and 74,180 will go to Chu. So again, basta bonus before salaries and bonus before salaries, interest, and bonus, you just simply multiply it by 20% or the bonus rate directly. Okay, number two. What if the bonus is net income before salaries and interest but after bonus? Okay? Bonus before salaries and interest but after bonus. This one, mas medyo complicated na a bit complicated na ang computation sa ato ang bonus. If that's the agreement, then we will be using this formula to compute for the bonus. So bonus is equal to net income times bonus rate over 1 plus bonus rate. So to compute for your bonus, so we have net income of 190,200 times bonus rate of 20% over 1 plus 20%. So therefore, your bonus will be 31,200. So again, same process earlier, you give salaries and interest as well as bonus. So this time, your remaining net income will be 88,300. So from 190,000 minus 101,900. And this again, according to the agreement, will be divided equally. So 88,300 divide 2, so 44,150 will be given to each of the partner. So from 190,200, 112,850 will go to C, and 77,350 will go to Chu. Next, bonus of net income after salaries and interest but before bonus. So this time, before bonus but after salaries and interest. So we also have the formula to compute the bonus in this particular agreement. So we have net income minus salaries minus interest times bonus rate. So we have net income of 190,200 minus salaries of 60 minus interest of 10,200 times 20% bonus rate. So we have 190 minus 60 minus 10,200 times 20%. So we'll have 100. So we'll have 190,200 minus 60 minus 10,200 times bonus rate of 20%. So salaries will be given to C and Chu as well. Interest of 7,032. Ang maglahi lang diri is ang amount of bonus. Kay lahi naman ang bonus na classification or type of bonus ang mahatag kay C. So, but the process will just be the same. Ang malahi lang is ang bonus. So, in total, from 190,200 nga net income, ang mahatag kay C will be 109,000 and for Chu will have 81,200. And lastly, ito, the most complicated among the four, which is bonus of net income after salaries, interest, and bonus. So bonus is equal to 20% of net or bonus is equal to net income after salaries, interest, and bonus. So the bonus may be computed in the following formula. So bonus is equal to net income minus salary minus interest times bonus rate over 1 plus bonus rate. So from that illustration, so you have 190,200 minus 60,000 minus 10,200 times 20% divide 1.20. So the bonus will be 20%. Or you could also use the alternative computation. So you have net income of 190,000 less salaries nga 60 and interest because these salaries and interest are already given. So we have net income after salaries and interest but before bonus of 120. So you have there 120 divide 120% to compute for the net income after bonus. So net income after bonus is 100,000 and therefore your bonus will be 20,000. You can opt to use this way or use the formula directly, or you can opt as well to use this way. So from that 190,200, 107,000 will be given to C and 83,200 will be given to Chu. Again, ang sulod sa 107,000 is ang salaries nga 30, interest nga 7, o bonus to C nga 20. Bonus to partners based on net income. Important notes. Provision for bonus is applicable only if the partnership has a profit. So dili parehas didto kay interest ug kay salaries na bisan pa og naay loss pwede ka maghatag. But sa bonus will only be provided if there is net profit. Thus, obviously, when a partnership is operating at loss, no bonus shall be given to a specified partner. And then salaries, interest, and bonus given to partners are not considered as operating expenses. These are only a way of distributing the profit and loss of the partnership. These are all part of the net income being distributed to the partners. Thus, if the partnership treated these as operating expenses, the net income must be adjusted to arrive the correct net income to be distributed to the partners. So therefore, in computing for the net income of the partners, such salaries, interest, and bonus will not be considered as an expense. Okay, so very important note in this lecture is you need to familiarize the manner on how are you going to distribute the net income. So from our discussion earlier, we have discussed different methods on how are we going to distribute net income or net loss to the partners, and as well as accounting for possible allowances to be given to the partners, particularly salaries, interest, and bonus to the partners. So that's the end of our video lecture for partnership formation. So if you would like to have a supplement reading on this particular topic, you may refer to the books of Dayag, Guerrero, and other books that you have. You could also refer to the self-instructional manual questions for practice solving. So that's it for our discussion and see you to our next video lecture. Goodbye.